Ladies and gentlemen, Greg Michalowski with a little late kickstart to your Forex trading day. Today's date is October 19, 2023. In the Kickstart video, I take a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar to get your technical trading day going in those major currency pairs. So let's get started. Looking at the euro versus US dollar, we at this time yesterday, we were trading in between the 100 and 200 hour moving averages. The price ended up breaking below that 100-hour moving average. And where did we go? We went down to this swing area down through here where we had a number of swing lows and swing highs. So you get the point through here, here, and here, and here, and here, and here, and here before coming down to that area, finding some support, breaking a little bit below it by a few pips, and then rotating back to the upside. We closed just above this swing area between the 1.0525 and 31 area. In the Asian session today, we kind of wandered our way down toward that swing area, found support buyers in the European morning session in that area, and we started to move back to the upside when we broke above the 100-hour moving average right here. That's the blue line in this chart. We saw increased momentum. The sellers turned to buyers above that level, moved up to the 200-hour moving average, as you do. Found initial sellers against that level into this swing area, and then broke above it in the early New York session. So the ups and downs continue around the 100 and 200-hour moving averages. Like I usually say, if we move above those moving averages, the bias remains more to the upside as long as the price can remain above the 200-hour moving average. That's, it's always a what if in trading. If this happens, then this is the intended or the directional bias. If this happens, the price goes below those levels, we look toward the 100-hour moving average. And so it's trading at these points right here where you either lose a little or make more than a little. Get it? So anyway, we're going to be looking for support here at the 200-hour moving average because we just broke above it. If the price stays above that, we can look toward this swing area through here. But really, the double tops for the week are the intended target on further upside momentum. They come in near the 1.0594 level. Let's call it 1.06. Move above that, and we'll start to look toward the 50% retracement level. Let's now take a look at the dollar versus yen, and same story as yesterday. The 100-hour moving average held support in the Asian session through here. We did it yesterday. Admittedly, we went below it one time yesterday, but that came down to the swing area and found support buyers. But since that time, we've been finding those support buyers against the 100-hour moving average. It'll take a move below the 100-hour moving average at 149.65 to increase the bearish bias, in which case we look toward that swing level or swing area where we found buyers yesterday. If below that, we'll look toward the rising 200-hour moving average at 149.35. But until then, the bias remains more to the upside. Of course, we still have, and this repeats my story, the 150 level, which remains a fear level for all traders. The price moved above that 150 level right here off the JOLTS data and then moved down 280 pips. We kind of got close to it here. Another 100 pip move, quick move to the downside. Always on the alert for those quick moves to the downside. That's what happens when you have a key level and also a fear of intervention, fear of Bank of Japan kind of changing their policy in midstream suddenly and not targeting rates. That could also send the yen higher, the dollar versus yen sharply to the downside. So you always got to be aware and be prepared. But as long as the price remains above the 100-hour moving average, the bias remains to the upside. It's a question of, do you want to risk one of these moves to the downside that we saw back here a few weeks ago and that we saw in trading this week? That's the question for traders for the dollar versus yen if you want to be in that currency pair. Let's take a look at the sterling versus US dollar. And downward momentum in trading here today during the Asian session. Some up and down volatility with support coming against this swing area here. And then we saw the break through it. We should have gone down further, but we couldn't. The price, when the price started to move back above the swing area here, that's when we started to see the sellers turn to buyers once again and force the price back to the upside right through here. And that's where we're heading now. We've just made a new session higher, looking toward the 100-hour moving average, looking toward the swing area up here between 121.57 and 121.67. The 100-hour moving average comes in at 121.649. We moved above it yesterday. trading right through here, but could not sustain the momentum as we approach the 200-hour moving average and found willing sellers. So the same story for this currency pair. Get above the 100, opens the door for further upside with the 200-hour moving average as the next key target that happens to correspond with the high price that we saw in trading yesterday as well. So double level at the 122.08 level. If we're able to get above the 100-hour moving average in the swing area, could also expect to see sellers against this level, or sellers. Traders who want to sell, this is the area that you want to sell against. We noticed we did hold it right through here after we broke above it, corrected up to it. So the market remembers those things. So there you have it, my late kickstart for 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.